Put the spotlight on the auto space. Auto sales for the month of August have been largely in line. In fact, some companies have actually even beaten estimates. To talk about this and the fact that everyone's watching out for the big GST meeting, we have with us Kumar, Rakesh, India analyst, auto as well as IT at BNP Paribas. Kumar, thanks so much for joining. And of course, we're focusing on autos in this conversation specifically. So, that's the thing that viewers will want to understand and, investors will want to understand, that whether what we're seeing in auto, whether this is a short-term, just a technical, tactical trade that's built up because the sector, a lot of our stocks beyond M&M haven't performed, or whether there's a lot more to it. First, let's start with the sales numbers. A company like Hero Moto is now at 5.5 lakh units a month. So a lot of those numbers have indeed looked good. But your thoughts?
Hi, good morning, and thank you for having me. What we have seen last month was two-wheeler companies generally have continued to push and build inventory. So while retail sales was up by about 2% we have seen the wholesale numbers growing close to double digit. And there is some level of inventory which has been built up. For some companies, it is much sharper inventory buildup. For the others, it may be slightly lower. But two-wheeler companies generally have built inventory going into the festival season, and also the expectation that the GST rate cut will drive demand higher. We have seen exactly the opposite for the passenger vehicle companies, however, that most of the companies have been far more cautious in any incremental inventory buildup. Rather, some of the passenger vehicle companies have even cut their inventory in the last month. With the upcoming GST rate cut, potentially the existing stock will be sitting with 28% GST slab, while the new rate comes down to 18%. What happens to this? So there is some level of uncertainty, and that is something which passenger vehicle companies are far more cautious, whereas two-wheeler companies are far more aggressive in terms of building their inventory.
So, talking about the GST cut as well and the expectations over there, the proposal right now says that for four-wheelers, as long as it's below 1200cc, the rate could go down to 18%. But above 1200cc, it could actually be 40%. So how could this impact demand, specifically for four-wheelers? And what's your call on stocks like M&M, Maruti and Hyundai?
So for four-wheelers, at least the small cars, we are talking about 10 percentage point reduction in GST. So that, if entirely passed through to the customers, would potentially mean about 8% sort of a on-road price coming down. Historically, we have seen the price elasticity for passenger vehicle is about 2 times. So that suggests that 8% reduction in prices could potentially lead to almost 16% incremental volume growth. What that means is we were looking at low single-digit volume growth for the next year, potentially year after that as well, slight recovery. You add about 15 odd percentage point additional growth to that. So we could start looking at 15 to 20% volume growth, at least for the smaller car segment. For the bigger cars, you spoke about that 40% can potentially become the new GST slab. So we are talking about 3 to 10% price reduction in those cars as well, which currently is 43% to 50%. So accordingly, using similar volume price elasticity, we could see anywhere about 6 to 15% sort of an incremental volume for the bigger cars as well. So overall industry volume growth from here on should pick up at least for the next 1 year. We would see high teens sort of a volume growth for the industry. What it also does, it resets the base entirely for the industry. So now this volume growth comes in, the incremental industry growth thereon would be on a higher base. So we would expect, if the GST rate cut goes through as we are expecting, a sizable earnings upgrade across the passenger vehicle companies. And hence we see passenger vehicle companies pretty well positioned to benefit from the GST rate cut. And accordingly, most of our top picks are within the passenger vehicle space. We like Maruti Suzuki and Mahindra, both of them. Maruti Suzuki, because of its higher exposure to the entry segment, which typically is even more price sensitive compared to higher price segment vehicles, and hence should potentially benefit. Mahindra is a company which has been consistently delivering pretty solid volume growth. They have outperformed in the recent months and quarters, and they have pretty solid model launches ahead, and that is something which excites us about Mahindra as well. We'll have to be a little careful, and we'll have to closely watch what happens on the tractor side, because there is GST rate reduction, but a risk that the input tax credit goes away. So how that impacts the final prices is something which we'll have to watch out in case of Mahindra. But in case of Maruti, it seems like a clean story of one of the biggest beneficiary of this GST rate cut.
Kumar, do you have coverage on Ola or any thoughts on what's happening with Ola? It's up 50% in short order.
So we don't cover Ola. We have definitely seen electric vehicle penetration starting to improve in the recent months. Part of the reason is also that the ICE demand was slowing down much more than what the EV demand was slowing down. We have now started seeing a lot of lower price model also getting launched by the newcomers as well as the existing comers, and we'll see more of that to happen in the coming months. So that will further improve the overall penetration in the EV space. That should help all the EV companies who are primarily in that space, as more product launches at lower price point comes in, should be beneficial. There is obviously a caution if the GST rate comes down to 18% for two-wheelers. The tax arbitrage, which was almost 23% because EVs are taxed at 5%, these ICE two-wheelers were taxed at 28%. So that also reduces. So that's something which we'll have to watch out how the EV demand pans out once the GST rate cut goes through. But a lot of model launches should help with the EV penetration, at least in the near to medium term.
Mm-hmm. And Kumar, though, of course, there's a lot of lobbying going on against it. And I think the industry is also asking for a uniform rate. I'm talking two-wheelers. But if indeed motorcycles above 350cc get charged at 40% or anything northwards of 28%, what does that mean for Aisha? Because the stock's already run up quite a bit this year.
So bulk of the portfolio is below 350cc, 349cc and some change. So that part is something which should not get impacted. Rather, it should be a beneficiary in line with what we were talking about in terms of price elasticity. We have seen that over the last 1 year, when the company started launching new variants at lower price point, they have seen significant expansion in its volume. So there is a clear indication that there is price elasticity in their portfolio as well. And if the price of less than 350cc vehicle comes down, they should benefit from that. Certainly, but it also creates a challenge for the industry in terms of, or especially for the company in terms of pushing for higher premiumization. It could stall the industry premiumization at around 350cc for some time. Till the time there is enough and more base of customers at 350cc who are lesser price sensitive and would still want to upgrade to 500cc or 650cc. Till that time, possibly that portfolio starts becoming more relevant for the international market, where iShare has been doing reasonably well, while in the domestic market, less than 350cc becomes the main driver for the volume growth.
Excellent insights, Kumar. Thank you very much for joining us, and really appreciate your time here on CNBC TV18.